Joining me now is the analyst behind the call. Let's welcome in Kevin Barker, equity analyst at Piper Sandler. Kevin, again, welcome. But why? Why now? Because there's certainly a lot of negative sentiment that could drive SoFi lower.
Yeah, I mean, it's been under a lot of pressure. There's funding pressure across the board. There's a lot of headwinds, but earnings are set to inflect higher, which we haven't seen for the last several years for SoFi. And I think as earnings start to move higher and we start to see that in the back half of the year, the market's going to come back to SoFi. And with the stock trading where it is, I think there's, you're going to see a lot of the market start to favor it once again.
Now, Kevin, I wonder, though, if there are a lot of investors in the market who are used to instant gratification. How much crow does an investor have to be prepared to eat before they feel like they're right on stuff that they buy right now?
Of course. I mean, we got a ton of pushback on the call, especially around financials investors who look at rising funding costs and a price to book value multiple that is fairly expensive relative to other banks. But at the same time, I mean, there's a reason why people were buying the stock a year ago and the growth that the company's been able to produce. Combined with what I think has changed quite a bit is that there's a deposit base now, which improves the funding base better than most other neobanks that we see out there today.
Yeah, we just had
differentiate SoFi.
Speaking of that, we just had Anthony Noto on a few days ago, post earnings, talking about what he's going to do with that deposit base and perhaps with the interest that, investors, savers can earn on accounts in a rising rate environment, especially given SoFi now is a bank. What does that do for them that gives them an advantage perhaps over competitors?
It gives them a sticky source of funding, a lower cost of funding relative to warehouse lines or selling whole loans in the market. That has been, continuing to rise. The costs are continuing to rise for those types of funding sources, especially in this rate environment. And so if they can, lean on a deposit base to be able to grow and to be able to hold loans for a longer period of time, their earnings should move higher.
So market cap on SoFi right now is right around $5.5 billion. What are the potential outcomes good for investors here? I mean, is this an area that's going to consolidate with neobanks where perhaps somebody tries to take them out for their customer base and technology at some point, or do you expect them to grow organically?
I think they're going to grow organically. I think they have bigger things that they're looking at over the long term. And if they can establish a deposit base and a strong capital base, which it appears like they have with the capital that they've raised, they should be able to continue to grow at a fairly rapid clip. If that were to continue, you're going to see quite a bit of upside in the stock as long as the market starts to stabilize here.
So where's the asterisk in your call here? I mean, usually, you don't come out and say, well, there's no way I'm wrong about this. Is there something that you're going to be watching down the line, and if they trip over a particular hurdle, then your call could change?
Yeah, I mean, maybe the student loan refi that happens after the student loan moratorium ends. We don't know when that's going to end, but we anticipate that's in 2023. So that could be a headwind that we're not anticipating. Rising funding costs. Maybe there's not a refi potential there on the student loan side with rising rates. So, there's definitely some headwinds there. Maybe the deposit costs are going to rise faster than we expected. Certainly that could happen. And the financial services segment continues to lose money. So the SoFi needs to start to show path to close to profitability in the financial services segment in order for a lot of this to work. If they do, though, there is a lot of momentum, and that will continue to move to the upside.
All right. It's cheap enough you're willing to take that bet. Kevin Barker, thank you.
Thank you, John.
Shepard Smith here. Thanks for watching CNBC on YouTube.